Okay, let's see. A bank teller says 7 reasons why not to keep more than 3K in your checking account. Okay, well, off the top of the head, I think they said keeping money in the bank is not beneficial to us because they're um, like I say, loaning our money, getting interest on our money, and things of that nature. And we ain't benefiting at all. So they say both put your money in a high yield savings account or put it in your brokerage account or just invest it. But you gotta have money in the bank. Like if you doing if you finna put a down payment on a house and shit too, right? So how the fuck that supposed to work? Okay, I spend my days behind the counter watching money move in and out of people's lives. I see the relief on a customer's face when the deposit clears, but I also see the sheer panic when their debit cards get skimmed and the rent check bounces because the account is empty. From my vantage point, keeping a massive buffer in your primary checking account isn't a safety net; it's a liability waiting to be exploited. Are they talk? I mean, so what they talking about then? Like, because even if you use your credit card, you gotta have the money in the checking account to pay your credit card bills on time. Most people treat their checking account as a cash out financial hold, letting thousands of dollars just sit there just in case, while having a buffer smart, keeping 1 to 3 thousand or roughly 1 month of expenses exposes that cash to unnecessary risks and guarantees you are losing money every single day. Here are 7 reasons I always advise my customers to move their excess cash elsewhere. Your checking account is the financial equivalent of a front door that opens directly to your living room. If a fraudster skims your debit card, they're stealing your actual money, not the bank's money. With those funds that disappear, you are immediately out of pocket. The scale of this threat is massive and growing, with debit cards often being point of entry for bad actors. Damn. So your cash is parked in a standard checking account earning. Okay, that's why I talk about the interest. Yeah, you losing money with that motherfucking money sitting there. If I put it in a high yield savings account, you might see the same number on the screen, but that 10,000 will buy significantly less next year. Yeah, inflation every year you lose $1. The math on this is painful when you look at the national averages. High yield misconnection. See, this is why I talk about the high yield savings account. While your checking account pays pennies, high yield savings accounts are paying dollars. See, I told y'all. Online banks currently offer rates that are exponentially higher than those of traditional brick and mortar checking accounts. Moving your extra cash to a high yield savings account is the easiest passive income you will ever earn, requiring zero effort once it's set up. Okay, so I was right about that. Available balance illusion. Psychology, we spend what we see. When you log into your bank account, see a 5 figure balance, your brain registers that you have plenty of money. Keep your check account. Lean forces you to be more intentional. But shit, if you got your checking account, you supposed to have your shit separated to your investment account, your mentorship account, your savings account, um, your account for you to trick off on, and your account just for necessities like the bills and shit. Like you gotta separate that shit at least 6 accounts. The phenomenon is well documented in behavioral finance. Studying by sweeping excess cash to separate savings accounts, see you create artificial scarcity that helps you stick to your budget. You're not supposed to have it all in one account anyway. Instant payment apps like Zelle connect directly to your checking account, making them a favorite tool for scammers because they're okay. But I agree. You're not supposed to have all your money in one. Don't call all your dust in a bucket, whatever the fuck they say. Your checking account is flush with cash. You are a more lucrative target for social engineering scams that can drain your balance in seconds. Okay, opportunity cost stagnation, lack of purse. Key takeaway: your checking account is a tool for transactions, not storage. Treating it like a savings account. Well, people also say like you supposed to use credit cards. Use credit cards, and your debit card is you're not supposed to use it. Your checking account supposed to pay for your credit card. So you pay for everything your credit card. You building your credit and you getting rewards. So we all need to get out of the habit of using debit cards and using credit cards and building our credit. The sweet spot: 1 month of expenses plus a small buffer, roughly 3 times for family. Don't let it come from being or you can just keep your money in a safe. If you, a lot of people just keep their money in the safe because they don't trust banks anyway. But yeah, you should always split up your money into like 6 different checking accounts, and that way you could grow and build relationships with different institutions, and then once you have built a good relationship with them in like 6 months, then you can ask them for one of their products, whether it be a personal loan, a mortgage, auto loan, um, credit card, whether it may be on the business side of all those. So yeah, just using everything as a tool. If you need help repairing your credit, um, comment 3K, and I'll DM you my free credit repair guide.